Well, Canadian trucking and logistics company TFI International is down sharply after missing expectations in its latest quarter, reporting lower net income and earnings per share compared to the same quarter last year. The company has also upset one of its big shareholders after it announced that it plans to move its headquarters to the United States. Let's talk about it with Ariel Rosa, senior equity analyst at Citi. Ariel, thanks a lot for joining us. The stock market reaction is very, very negative. Is this earnings reaction, or is the move of the headquarters part of the stock market reaction today?
Hey, good morning. Thank you for having me. No, so I think the decline in the share price, frankly, I think is justified. It was a disappointing earnings report. It is clear that there's still a lot of challenges at TFI in terms of their ability to turn around their long struggling U.S. LTL business, and that's really what you're seeing in the stock price today. In terms of the change of domicile, I'm not sure that has a huge material impact. Certainly from a fundamental standpoint, it doesn't really change a great deal. The reality is, and TFI mentioned this in their press release, but 70% of their business is already tied to the United States and really located in the United States. And so while I know it's ruffled some feathers and upset some shareholders, I think it's a move that frankly makes some sense and allows them to be compared to their peers more accurately in terms of the way they report and the timing of how they report.
Okay. You mentioned the company still working to turn around one of its key business segments in the U.S. Expand on that. How steep is that challenge?
Well, it's pretty bad, to be totally honest. I mean, look, the operating ratio, which is really just the inverse of the operating margin, the operating ratio was not good this quarter. It came in below what management had guided to. It reflects not only a challenging market, but frankly, also a lot of cost challenges internally at TFI. And it raises some questions about their ability to remain competitive in this space. We know that, we've been in a pretty deep freight recession, but we haven't seen a lot of their competitors get hit the same way they have, the same way that TFI has. We've seen their margins really, which were already not great, that their margins are pretty thin in that space. And it raises a lot of questions around whether they can remain competitive as a unionized LTL carrier. What we've really seen over the last couple of years in this industry is the non-union players have been very successful at controlling costs, at adapting to the market, whereas the numbers that we got last night from TFI suggest that they are struggling to adapt to the market and the market weakness. Now, there's still the prospect, of course, that as conditions improve, as the cycle inflects, that TFI stands to benefit there. And this has long been, frankly, a very, very well-managed business. And so we kind of want to balance that against the kind of short-term concerns against the long-term reality, which is that this has been a very well-managed business. So we think they will figure it out. But there's no denying that this result was disappointing. And I think the share price reaction today is frankly appropriate, and it's reflecting that.
Interesting. You refer to a freight recession, a freight shipping recession. How should people think about the possibility of cross-border tariffs, very steep ones, affecting this business?
It's a great question, and it's certainly not helping at the moment. I know there's been a lot of concern that, if tariffs, particularly if the Trump administration gets really aggressive with tariffs, it could have very negative implications for the economy. And I know the Canadian economy certainly is vulnerable in that regard, but frankly, the U.S. economy is as well. And what we've been hearing from shippers, what we've been hearing from, especially on the industrial and manufacturing side, is a lot of customers are kind of sitting and waiting on, sitting on their hands, waiting for some sort of resolution. And our concern is that kind of shifts out the timeline for when we might see recovery, right? And so a lot of people came into 2025 optimistic about the prospects for industrial and manufacturing activity to take off and kind of exit this long period of malaise that we've been in. But now as we kind of battle with this tariff debate and wait to see what's actually going to shake out in terms of tariffs, it probably elongates that period for recovery.
So lots of challenges that you've outlined very well for us, a difficult shipping environment, elevated costs at this company, competitors which have non-unionized workforces, the threat of tariffs on top of all of that. But you remain very positive on the stock. You've got a buy rating. Your price target is $162. We'll put up a U.S. listing of TFI. That's TFII in New York. And we'll see the share price at about $109 US per share. So why do you remain longer term? I assume that's a target that applies to the next 12 to 18 months. Why are you so positive longer term?
Yeah, and so just to be clear, we have not yet updated our forecasts based on fourth quarter results. It only came out last night, and we kind of take some time to do that. But as we think about the longer term potential of this business, and I mentioned this a couple of minutes ago, but this is a business that historically has been very well managed. They generate a lot of free cash flow. They've been very good at doing M&A. So I think it's reasonable to see some of these challenges as short-term in nature. But I think from an investor standpoint, it is reasonable to be a little bit more cautious. And I think investors are going to be demanding evidence that the turnaround is taking hold before really turning bullish on the stock. And so from a long-term standpoint, especially given the free cash flow generation of this business and the strong track record of management in terms of compounding earnings over time, I think there are a lot of things to like about TFI long-term. But again, the short-term challenges are undeniable. And, I could see the stock kind of being in the penalty box here for a period of time before it eventually starts to recover and maybe sees a little bit of room for improvement. And hopefully the share price can move a little bit higher.
Ariel Rosa, senior analyst of equity research at Citi and an analyst who covers TFI, one of the big movers in Toronto.